Hey, my name is Steve, or PTSD Trader on StockTwits. This is my first video, something I've been wanting to do for a while, so I'm really excited to do it. Um, First, let me give you a quick background about myself and my trading, just so you know where I'm coming from when you're watching my videos. I've been trading since 1996. Um, my style is very aggressive, but it's a layered trading style. I'll explain what I mean by that in a minute. Um, you know, I've traded commodities, options, stocks. Um, I'm just a very avid trader, and it really, trading never really leaves my mind. Unfortunately, it's a blessing and a curse. But anyway, back to what being a layered trader. Basically, what that means is that I'm trying to catch trends within a larger trend. So, for example, I try to catch um, this move here, um, and then I'll try to be out of the market. Um, I don't usually try to short. Sometimes I do. Um, I don't usually try to short within a larger uptrend such as this one. Um, but I'm in the market when the market is very strong, and I increase my risk when the market is very strong, and I decrease my risk as the move gets old or starts to wane. So that's a description of how I trade. Again, it's a pretty aggressive style. I'll use a lot of options here in a move such as this, and then as the move starts to get old, I'll peel off options and I'll just go to stock. And then when my breadth indicators tell me that the move is over, I'll just be completely out. Um, Real quick, I want to show you some of the breadth indicators that I use. Um, these are my two go-to um, indicators: the McClellan Summation Index and the Zweig Breadth Thrust. This latest move that we're in has been a pretty awesome one, but on February 6th, the Summation Index turned. So what I try to do is when the Zweig is getting down here at this 40 line, I've put these lines here. This is when the Zweig, traditionally tops out. This is kind of my sell line for when the Zweig moves from this line, crosses over here, comes back down. Usually when the Zweig breaks the 55, I'm out. And all these really are is a measure of Zweig is like a measure of power within the market. Um, and then the McClellan Summation Index. If you don't use McClellan, you really should. It's a great barometer for the market. Traditionally, what I see is that it lags by maybe 1 or 2 days, but when it turns, the signals can go for a while, and they're fairly reliable. This one here, there was some noise in here, but for the most part, these indexes are really helpful to me and my style. Again, my style's not for everyone. Everybody has their own method of trading, but that's a little bit about mine. Okay, so where are we now? What I like to do is put the job numbers on my SPY chart, because I view the job numbers as the absolute #1 driver of the markets. Between that and rates, those are the two biggest movers of the market, in my opinion, and it's always been that way. So just a quick recap of the last few numbers. We had this 169 number back in September. The market jumped. pulled back here. Then we had the government shutdown around in this area, so this number was delayed. Um, Market kind of moved sideways. Then we had a great 204 number, 204,000 jobs. The market jumped on that news, went sideways for a while. Then we had the 203, consolidated for a while, then jumped again. Then here in January we get into this this horrible 74,000 number. Um, and this is when traders are, have started to blame everything on the weather. Um, which, by the way, I do agree with. I live out here on the East Coast, where I'm in a suburb of Washington, D.C., and we have had the most brutal winter we've had in a long time. Um, and it has affected everything. It's affected travel, it's affected at my job, we've canceled interviews. So I've seen firsthand that it really has caused havoc. But in any case, we had this horrible number. The market digested it for a couple of days, and then it absolutely tanked. Um, then here, this is when traders said, "Oh, we are going to blame everything on the weather." So then, once that was decided, the market took off, and then we got this 175 number. One thing that I've always realized about the job number is that whenever it comes out, there's always a period of traders deciding whether the number's already been baked into the current move, or whether this number's great enough to propel us higher. Um, Here it's nice when you get a great number after a downtrend like this, because it can propel you higher. When you get solid numbers in a move that's already kind of happened, it can propel you higher, but it's not. It's never as strong. It's always a great time when you get a number like this, off coming off of a downtrend. So anyway, we got this great 175 number, which was above estimates, and then the market has moved down for 2 days, sort of consolidated. We're in a wedge pattern here, but today we had an interesting candle where we closed right at the bottom of the wedge. I took profits on most of my positions in the last 2 days here, but I did want to go over a couple ideas that I've been thinking about and trading. First, the whole agricultural complex has been taken off lately. So I've got two ideas that are sort of within this theme. Here's the DBA. This is the Agriculture Fund ETF. You can see, if we zoom out on the weekly, that it's just taken off after a 3-year period of pain. So what I've specifically been trading is corn. Corn's gone through, look at this long downtrend. I really do like downtrends when I'm not in them, like this, because when it finally does turn, it's a nice move. So I bought the May 32s, I don't know, somewhere down in here, and had a great move up here, and then I really wanted to be patient with this trade, but I did get shaken out of my calls here, and I really, that was kind of a discipline thing. I really should have stayed in, but nonetheless, I cashed out that trade, and it was a good trade for me. Up here, it would have been a phenomenal trade for me, but it's always hard to know. But corn, the commodity, did hit, it crossed $5 a bushel here, which, that's an obvious sign. I probably should have thought about taking profits here. But in any case, I got back in today into the 34s because I really like this hammer candle. I really like the action that I saw today. I really expect that this could easily see 35 and beyond here. I'm looking for a retrace of this horrible downtrend from here to here. Um, so, a 50, just a small retrace. I think I labeled the 35. The 35 is the 23.6% retrace of this huge down move. So, I'd love to see that. I'd love it even more to see that. So, we'll see where that goes. Another way to play this huge move in the agriculture complex is Deere. It's a great stock. I caught this move here earlier in the year when they announced a 25% buyback. Believe it or not, they're buying back 25% of their outstanding shares. All Deere does is make money. Um, Here is the really long-term monthly chart. Here are sales, earnings per share, and the PE ratio. Um, you can see sales just gone from 20 billion to 36 billion since mid 2010. All they do is make money, and the earnings per share is the lowest it's been, since 2005. So I really like where Deere is. I think it's a solid idea. What I'm trying to do on it right now, here, is catch. Okay, it's in this pennant formation, and if you zoom out to the monthlies, the Bollinger Bands have really squeezed down, which I love. I love seeing that because the premiums on options get really cheap when Bollinger squeeze. So I've listed my reasons here for why I like this trade. DBA rising after a long period of horridness. Grain prices rising. There's a huge 25% stock buyback. And you got some built-in risk control here with a 9.3 PE, which is 66% of the 5-year average. So what I've done is I've bought the 8750 calls, the June 8750s, and I'm looking for a move just back to the top of the triangle. Nothing too exciting. I'm not trying to take too much from the stock. I'd really just like to see a move to the about 92, 9150. That'd be a nice move. But again, long term, this stock is a great deal. The agricultural complex is just beginning to turn. If it breaks out of this pennant, I think you're going to see 100 pretty quickly. Another stock that I've been trading lately is J.C. Penney. It's definitely a turnaround play. Let me zoom in here. We had a huge gap up here on strong volume. It consolidated for a couple days, and it broke out of this wedge pattern on the weekly. I mean, look at that long wedge, long wedge of just sheer pain, and then finally we get a solid breakout on a lot of volume. There's a lot of guru investors that have bought into this. I'm a subscriber to GuruFocus.com, and you've had, I like to watch what some of the big guys are doing, and there's been quite a few who have bought in here, down in this area, as a turnaround play here. It's a really tricky stock to play. It'll crank up in the morning. I'm noticing that early morning, pre-market, there'll be a bid for it, and then the bid, is pretty great all the way until about 10, 11 a.m., and then the stock will just trail off, and it'll close on the low, and you'll be like, oh, this is the end of the trend, but it isn't, because the next day it takes off. Right now, things are starting to slow down a little bit. If you want to get involved, you might want to see a pullback. What I'm looking for is a move to my target of 1038 here, basically to this resistance area here. Again, a retrace of this super long downtrend is all the way up here is a 23.6% retrace of the huge downtrend, all the way up at $14, and we're at basically $9 now. So that's a few ideas for you. This has been This has been PTSD Trader, and I'll see you on StockTwits. Bye bye.